Good morning from Chicago traders. There appears to have been a glitch in the prior TraderByte link. It ended the video immediately after it started. Let's move ahead. It is 8:07 a.m. Central Time, 9:07 Eastern on Thursday, October 23rd, 2014. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Start off with the overnight outlook. There's some really interesting trading going on overnight. Lower volume than the last couple sessions, but still interesting nonetheless. Main releases. German October prelim manufacturing PMI beat came in at 51.8 versus 49.5, much better. Eurozone October preliminary manufacturing PMI beats also comes in at 50.7 versus 49.9 expected. Services come in at 52.4 versus 52.0 expected. So those numbers came out and caused a pretty strong pop across the board. The S&P 500 moved from about 2250 to 39 in about 3 15-minute bars. China's October HSBC PMI manufacturing prelim, also a small beat, 50.4 versus 50.2 consensus. And then Daimler, which is represented in the Euro stocks as well as in the DAX. Q3 revenues beat at 33.1 versus 32 billion. Credit Suisse, which is represented in the SMI index, Q3 net beat at 1.03 billion versus 0.8 billion consensus. Yesterday after the close, AT&T earnings per share came in at 63 cents versus 64 expected. Revenues came in at 32.96 versus 33.25, a little bit lower than expected. It lowered its guidance for the fiscal year, and it was down about 1.5% after hours. This morning, initial claims came in at 283,000 versus 281,000, so slightly higher. Continuing claims came in better at 2.351 million versus 2.38 million expected. There was for those who trade energies, there was a news article that talked about Saudi Arabia having cut crude oil supply to market in September by 328,000 barrels per day. And it's interesting to see that because that didn't stem the fall at all. Looking at what's ahead, at 8:45, just 15 minutes after the open today, we have U.S. manufacturing PMI for October preliminary, expecting 57.57 manufacturing PMI. That's a pretty high tier number. And then following that at 9 o'clock, leading index comes in expected at 0.70. European consumer confidence also at 9 o'clock, expected at -12. And then at 9:30, we get EIA natty gas storage, expecting 97 billion cubic feet. At 10 Central, 11 Eastern, we're expecting Kansas City Fed manufacturing activity at 6. That's a low tier number. And then nothing really left on deck as far as economic releases. As far as speakers, at 12:30 Central today, we have ECB's Lind speaking. And then as far as auctions, we have a 10 o'clock 7 billion 30-year TIPS auction. Again, 10 o'clock 7 billion 30-year TIPS auction today. All times are Central. Lots on deck for earnings: Microsoft, Comcast, Occidental Petroleum, 3M, Caterpillar, Union Pacific, Eli Lilly, Celgene, Amazon, General Motors, and just many, many, many others. So be prepared for that. Let's look at the true picture of the market, the technical picture. Here's what's happened over the last couple of sessions. So what we have here is market did on Monday, and then the overnight session following that. Ooh. Okay, so man, had to really scrunch that down. Quite a bit of range here. So here's what we did on Monday, and pretty balanced day. Then we have the overnight session on Tuesday. Overnight session on Tuesday, very nice bottom here, pull back to the Monday close. Rallies up to 1916.50 overnight. Came in on Tuesday, and the expectation was for that 1650 to be taken out, and we had put out some targets above, mainly 30 and a couple of others. Market rallied straight up from the 1908.75 low. Remember, 1909 quarter is a key number that's been out there for quite some time. Went through it by 2 ticks on Tuesday, and then we had a pretty strong rally up. And then on Tuesday night, Wednesday morning, sideways, a slight push to 43.75, and the expectation yesterday in yesterday's trader bite that was outlined was the market is likely to push towards the overnight high, which was 43.75. And then but the expectation is for responsive selling to take over. And my view on what the market's likely to do yesterday was to actually break the overnight low, which was around 30.75. Was looking for 1930 retest, extended push to maybe 28. But generally, I expected yesterday to take back some of this rally that was put in on Tuesday. However, that was very hard to trade yesterday. I was just speaking about this in the S5 chat room. Yesterday, we did have the responsive selling early. We pushed up, and then it looked like it was failing to get to the overnight high, and it rotated down to 34.50, and then all of a sudden it started to push over and up to the overnight high. 43.75, missed it by 2 ticks at 43.25, and then the selling came in. So once the market pushed down and then took that back and started to move up towards 43.25, I had discounted the hypo 1 from the trader bite for further selling. I had started to believe that the market was not ready to sell off yet, and that it was trying to push higher, and that kind of threw me off. It ended up pushing to within 2 ticks of the overnight high, and then selling started, and the selling was a lot stronger than expected. A total range of 23 points yesterday on the selling. So this morning the expectation was we did leave a weak low, but we rallied pretty good on the open. On the close, the closing swing was pretty strong on the upside. So when we look at yesterday's action, we see here that this rotation here was 7 points back towards the point of control. A weak low was left behind yesterday. So as I was discussing this after market with someone who wanted to hold a position long, I suggested to put a stop in just below the low, a little bit below the low, because we do have a weak low here. It did not look like it was very strong, but the target above again was 1930, a retest of 1930 if it were to continue the action from the closing swing. Going back to the overnight, what ended up happening is a push to 1928, came back, traded sideways until the European Open. The European Open saw us doing some selling. It looked like the 2025 was in danger here. We had a double bottom on the overnight session, triple bottom actually by a tick, and it looked like 2025 was vulnerable. However, the German numbers surprised the market. The German and the Eurozone PMI numbers surprised the markets and have put a bid under it. A strong pullback on that swing, and then the markets back up to the highs on the session, 41.50, and holding, with the point of control having shifted to the high end of the session. The expectation is for this to be a weak high and for this to push through and test yesterday's high because of the configuration that we're in today. There's no consensus on price overnight, but the bulk of the volume is happening at the high end. So you can see the value areas skewed to the upper end of the profile. So the expectation is for these weak tops here to be broken at some point during today's session. So that's what's shaping the outlook for today. Yesterday we traded inside of the ninth. The ninth is an interesting profile. When we look back in time and use that period of time as a reference for what today's action is, we call that a template day. So yesterday's key target above was actually 1945. You can see here on the 9th, we opened up high, tested 60.75, and sellers just dominated that day. We had a couple of the initial rotation down on the 9th was 1945.25. I'm looking for that, and it's an LVN here. I'm looking for that to be the key target above today. I expect a small reaction there, not very much, nothing there on the composite, but I expect a small reaction here at 1945. So this is a level I'm going to watch. If the 1945 is taken, then the next area will be 1950, and then we have some key areas above from the profile, from the composite. So as we look at what's up ahead, we see that, ow, my cat's nibbling on my feet. We see here 1945 in this area of this CHVN, and then next would be 1950, and then above there, 1959.5 to 1962 will be key areas. We've essentially taken back this balance zone here and are battling in this area. So yesterday's responsive action, that's what that hypo was built on, is responsive action as we approached this 1940 MC point of control the prior day on Tuesday. So the expectation is for the market to have an initial reaction back. The 1930 was based on an old level here that we've traded around quite a bit. So we're stuck in this composite profile. We're stuck in the profile of the 9th of October. So we're using that as a reference. And of course, 1945 again is the key target here based on what happened on the 9th and based on the composite high volume node here at 1944.75. That's what I'm looking for today. That's my primary hypo, is that the market is likely to fight a little bit. Now, the overnight inventory is long. We closed way down here, and we're opening up in the 1939 area. So it's there's a lot of excess demand there that might have to balance on the open. I expect that the extent of any selling to be down to 1932, 1930 again. These numbers are pretty stale. We've been trading this area for a little bit, but that's the extent of it. I expect buyers to dominate today. And I expect this to continue higher towards 1945 and then to start pushing the next levels up, 1945, 1950, and so on and so forth. If we fail to do so, if we happen to try to push up, fail, and start to move through then basically 1928 becomes the target, is the point of control of yesterday, and then the gap closed 1926, and then we're back at looking at this 2025, which is a week low. We're back at looking at this as an area that's likely to be tested. So the market might be ready at that point. The market might be indicating that it's ready to fill this gap zone that we have left behind. This is a really big gap zone here, and we're starting to work towards auctioning that before continuing higher. The overall trend, intermediate trend, is back up. The slightly longer time frame trend is down, but the bigger time frame is still up, as witnessed by this fundamentals chart. You could see how we basically had this spike above the second standard deviation, as I talked about earlier this week, that generally that's marked a bottom. And look at how this 52-week lows just absolutely plummeted over the next couple of days, and we have a turn. And I posted a couple of images of it, and I talked about it, I think, on Tuesday morning, that the last time we had this, it's marked a short-term bottom. So we're still in this big channel on the S&P 500 and holding. We did pierce it a little bit, but I'm looking for it to start to push back to where we were a couple of months ago in the consolidation. A key area, I'm going to give you a key area above, is 1955. This level here, as we push up 1955, 1956, this area here, which is the low of this balance, is really key for sellers to defend. Not being able to defend this puts 1987.50 back on deck and new highs back on deck. So if sellers have anything to defend, it'll be probably the 1955, 1956 area up to 59.50. Failing to do so means buyers are likely to push back to 87.50, and then eventually new highs are likely. A lot of information, but that's how things are shaping up. We've had 2 days of overlapping trading. So this is a new composite, new micro composite here, starting with Tuesday and Wednesday, and then basically going to use that to just find the spots. I'm kind of using that already to find the spots. If we get below the 2250, the next key area down to test will be 19.25 down to 18. As you can see here, the double bottom we left behind on that balance, 1918. Those are the targets below if the market fails to push to 45 today or tomorrow. So those become your key targets below. But the 2-day composite is very clear as to where the market liked to auction and where it rejected areas. So rejected areas, 31.50. So any selling this morning, if the market rotates down and starts selling, it's I believe it has room down to 31.50 for a test. Taking out 31.50 puts 26.50 on deck, and then the 22 is likely to be tested shortly after that. Again, the primary hypo is for responsive selling initially back, and then I expect the market to turn and go test 1945 this morning. We'll see what it does. As always, if I'm wrong, if the market shows that that primary hypo is wrong, it reaffirms my conviction in the secondary trade of the day, or the secondary idea of the day, because that's information that I love to use. So this is not about who's right, who's wrong, who's able to predict what will happen next, because the outcome of every trade is 50-50 no matter what. There's just no way to know what's going to happen. All we can do is box in what we're going to do about what the market could do in the future. So we're looking at probabilities, and we're looking at if this, then that, as primary ideas, usually 3 hypos at least, if not more, depending on the action. Balance brings in more hypos because a lot more can happen. But here, in this scenario, we have 2 key hypotheses. and I covered those. But we just need to wait for the market to decide what it wants to do next. Good luck today, and I'll talk to you soon. Take care.